Real Country 1430 AM and 107.3 FM WRDN. I'm Brian Winnekins. This is the WRDN Morning Farm Report. And joining us this morning is Michael Langemeier. He is a professor of agricultural economics at Purdue University. And Michael did a presentation on corn and soybean price outlook and at Commodity Classic. And we're going to talk about that today. Thank you to our Commodity Classic sponsors, including Compeer Financial, Animal Wellness Center of Buffalo Valley, Annabis Silo, Osteoplastics, Synergy Co-op, Wisconsin Farmers Union, and A&J Agronomy. Professor Langemeier, thank you for joining us this morning. 2020 was an interesting year for commodities, and it looks like 2021, boy, there's a lot of different things that are going to affect price outlook, from exports to African swine fever to even the weather, correct?
Yes, there's a lot of factors could impact both soybean and corn prices. And one of the big ones is acreage. What is the acreage going to end up being for both corn and soybeans? I mean, most market analysts expect soybean acreage to increase from last year, certainly, but how much of an increase? Certainly both corn and soybeans are very short in terms of stocks to use. In particular, soybeans is extremely tight stocks to use, and so rather than just having one of the crops be relatively short from a stocks to use, you have both crops, and so really there's incentive to increase both acreage, but probably the largest incentive right now is to increase soybean acreage. And one of the things I talked about at Commodity Classic is the fact that this is not new necessarily, because this has been the case for several of the last years. The fact that it looks like, at least in the Eastern Corn Belt, that soybeans might be more profitable than corn in 2021. They certainly were more profitable than corn in 2020. And if you go back a few years, 2016, 2017, and 2018, soybeans were substantially more profitable than corn. And so from that standpoint, it's kind of the same as it has been the last few years. What's really unique about this year is because of the very tight stocks to use, there's such a wide band around possible corn and soybean prices. This makes it really, really difficult to make these acreage decisions. For example, I just looked at some possible distribution of corn and soybean prices this morning. The kind of the midpoint corn futures price for the December contract is about $4.55, but there's a 25% chance that could be below $3.85. There's a 25% chance it could be above $5.50. That's a very large range. The same is true with soybeans. The midpoint price is $12 per bushel, but there's a 25% chance that it could be below $10.50. And there's a 25% chance it could be above $13.50. So just a lot of uncertainty related to both of those. I want to talk a little bit about the current soybean to corn price ratio, because that's extremely important when you're looking at corn and soybean acreage decisions. Right now, the ratio is about 2.7. That's quite a bit higher than what it is historically. If you look at from 2007 all the way to the current month that we have cash price data for, which would be January, the ratio is about 2.4. For Indiana, for example, it's not that different for other states, but for Indiana, about 2.4. And so we're sitting in a situation where, as I indicated earlier, it looks like soybeans are relatively more profitable, but that's using the midpoint price. Those prices, given that wide distribution of possible prices for both commodities, it's really going to depend on how big those acreage numbers come out, how big the acreage numbers are for corn and soybeans for this summer.
Meanwhile, Michael, and I know you only talked about corn and beans, but this also could play a factor in it. The wheat market's like, excuse us, don't forget about us over here. We have $6.50 a bushel wheat over here, so please don't forget about us.
Yeah, and that's going to be really interesting. One of the acreage decisions that's really difficult, and out here in the Eastern Corn Belt, it's not that difficult because we don't produce that much wheat. We do produce wheat in southern Indiana and in southern Illinois, primarily so we can have double crop soybeans. And so that's the primary purpose to produce wheat. But I'm from the plains. I'm originally from Nebraska and spent a lot of years in Kansas. And those are more winter wheat region. But as you get to North Dakota in particular, you're talking about spring wheat. And something I haven't looked at in enough detail, but I'm curious to see how competitive spring wheat is to corn and soybeans. And so that there's some really interesting decisions that will have to be made in states like North Dakota, where spring wheat is a very important crop.
Talking with Michael Langemeier. He is a professor of agricultural economics with Purdue University. So with all this uncertainty, Michael, what should producers do when they're looking at this decision? I profit. Yep, you want that. Cost of production, you want that. Are there other things that producers need to be looking at before they kind of make some of these decisions?
There is two things that are very important this year, more important than they typically are. These are important every year, but they're more important than they typically are. The prospects for net returns per acre for land for corn, soybeans, and wheat look pretty good for 2021, and so that makes making crop insurance decisions even more important. Make sure you have a decent revenue guarantee. This is not the year to reduce your coverage, and one of the reasons I mentioned that is premiums are up substantially this year because of the higher prices and the high volatility. And so I'm afraid some producers are going to say, well, I can't really afford the coverage I had last year. I'm going to reduce that. I would highly recommend that you don't do that. Pay that extra money, because you've got a lot to lose, this year. You want to kind of protect those net return prospects next fall. And one of the ways to do that is to maintain good crop insurance coverage levels, as much as you can afford, and make sure you are trying to set that floor on your revenue. Another thing, and this is not my expertise, but another thing that's extremely important is developing a marketing plan. Because again, with a good marketing plan, you can try to protect that price to some extent, and try to set a floor or reduce the downside risk that could result because we either have a really strong corn supply, or really strong soybean supply, or something happens in some other place in the world that creates a situation where corn and soybean prices are weaker. I mean, that's certainly, like I said earlier, that's certainly a chance for that to happen. And so anything you can do to try to ensure minimum revenue next fall is very important. That would include the marketing plan and making wise crop insurance decisions.
Talking with Michael Langemeier. He is a professor of agricultural economics at Purdue University this morning. He had a presentation during this year's Commodity Classic on Corn-Soybean Outlook. Michael, you mentioned crop quality. Boy, how important will that be in revenue for this year? Because the prices I talk about on from the Board of Trade during my market updates, and those median prices you talked about, that doesn't include some of these other things. So how important will that be this year because of our low ending stocks and weather issues potentially, and export issues and all of that?
Yeah, all of those things you talk about is another reason why you need to take a close look at your marketing plan and crop insurance decisions, because there's so many things that could happen between now and fall, obviously, that could create a situation where we had lower prices, and you go back to 2019, for example, where you had all that problem getting the crop in the ground, and something like that happened, prices would be really high. But if you had a situation, which we've had in some other years, recent years, where we have bin busting yields, the prices could be lower than those midpoint prices I was talking about. That's certainly the case. And another thing that's kind of a wild card here, and you mentioned it earlier, is what's going to happen to exports. I mean, we've had very, very strong exports, obviously, in this year, the last few months. But are they going to be the same for the 21 crop? We really don't know that, and that's going to be extremely important for soybeans, but also for corn. I mean, we are still the largest exporter of corn, even though we only export about 15% of our crop. We're still the largest exporter of corn, and so anything that would interrupt the export flows, like world economy, things. Maybe China doesn't buy as much corn or soybeans. They've been big buyers the last few months. Could really change those price expectations for the fall. And so there's just a lot of wild cards out there. And so that's why anything you can do to try to reduce that downside risk is so important.
Finally, Michael, how will basis levels play into all of this? Because especially again with the exports
The
and
basis levels are going to be the basis levels in general are going to be pretty strong. I'm talking in the Eastern Corn Belt here. I don't keep track of those quite as close as I in the Western Corn Belt, like Nebraska, Kansas, in that area. But the basis is certainly going to be strong in the Central and Eastern Corn Belt all the way until we get closer to the 21 crop. As we get into the 21 crop season, get into September, October, November, we're expecting more normal basis. For us, that would be, this varies depending on where we're at in the state, but for us, that would be like 25 cents under for corn and 35 cents under for soybeans. That would be our normal. But basis information is available to people on the website, and you can get that, also get that information from some of the people you sell your crop to. And so that's what we're expecting, is return to more of a normal basis. But that's assuming that we have a trend yields. Again, if something happens and we have a short supply, basis will remain strong.
that is Michael Langemeier. He is professor of agricultural economics with Purdue University. You're listening to the WRDN Morning Farm Report.